Okay, in this last video, I want to have a chat about what's meant by the federal budget and what the impact of the coronavirus is likely to have on the federal budget. So first of all, the federal budget basically is a statement brought out every year which compares government revenue to government expenditure. So every year, the government collects a certain amount of money, so approximately $400 to $450 billion every year in government revenue. So that comes in the form of taxes. So the main one is individual income tax, but it also includes company taxes, sales taxes like GST, and excise taxes on like cigarettes and alcohol and things like that. So people get taxed in various ways, and that's how the government collects all their money. They also spend a lot of money every year. So every year the government spends money on welfare and age pensions and unemployment benefits, on healthcare, education, transport, defence, all these other areas, and they spend around $450 billion every year as well. So basically, a budget surplus means that in any particular year, government revenue, so the amount of money they collect in tax, exceeds government expenditure in the form of healthcare and welfare and all those other forms of expenditure. A government deficit means that the government spends more than they earn in a given year. So their expenditure on all these things here exceeds the revenue they get from all these sources. So when you hear the word budget deficit or budget surplus, it's comparing government revenue and government expenditure in a particular year. In Australia, we have run budget deficits since 2008. So for the last 12 years, every year the government has spent more than they've earned. Okay, so which basically means that our debt has been growing every year. So if you run a deficit, that means you're spending more than you're earning, and your government debt will grow. So Australia's debt has grown consistently over the last 12 years. In 2007, we actually had negative net debt, which meant that the rest of the world owed us more than we owed them. But right now, Australia's got gross debt of over $500 billion and net debt, which we're going to talk about in a sec, of over $300 billion. So the last time the government ran a surplus was back in 2007, 2008, when Peter Costello was Treasurer and John Howard was Prime Minister, when they announced a surplus of $10.6 billion and achieved a surplus. So that was what they anticipated, and they actually achieved a surplus of nearly $20 billion. So basically at the moment, Australia has around $392 billion in net debt. So the difference between what we owe the rest of the world and what they owe us. Not just the rest of the world, but what the government owes the rest of the world and private entities within Australia. That debt is expected to increase by approximately a third to at least $507 billion by the end of June, and will continue to grow over the next 6 months. So just to put that in perspective, during the GFC, so back in 2008, Australia had net debt of minus $22 billion, which meant that the rest of the world actually owed us more money than we owed them. But now we have debt of close to $500 billion after the coronavirus and the impacts it's going to have on government spending. So the Morrison government has announced stimulus worth around $213 billion so far. So to put that in perspective, the government collects around $400 billion in tax every year, and they're going to spend nearly half of that on extra spending measures that we weren't initially doing. This is much larger than what they did during the Rudd government. So we talked about in class that the government gave majority of citizens $900 during the Rudd government and to try and stimulate the economy, and they spent money on schools and infrastructure. That totaled around $67 billion, where this one is 3 times the size of that to try and avoid a recession in Australia. So exactly what are they doing? First of all, it's important to recognise that they're not building stuff. It's not really spending initiatives that they've, in terms of infrastructure that they've announced. It's mainly about supporting people by providing payments and subsidies. So there's been 3 stimulus packages announced so far. The first one was on March 12, which was around $17 billion worth of support. Another one in March 22 of around $66 billion, and a third one on the 30th of March. It was totaling $130 billion, which brings up total to around $213 billion of spending so far. So the first stage, as I said, there's 3 stages. The first one, basically what they did is they announced that they were going to give 6 million welfare recipients a one-off cash payment of $750. So that would go to unemployed people, to pensioners, and that would be on top of what they normally receive. So normally pensioners receive $800 a fortnight, and unemployed people get around $560. So they were going to give them one cash payment initially, of $750. They then revised that in the last changes that were announced, that it was going to be 2 payments, but initially it was 1 payment. Second thing they were going to do is give cash payments to nearly 700 small businesses of between 2,000 and 25,000 to try and help them to pay their wages so they could didn't have to sack as many people. And they also put $2.4 billion in that into a healthcare package, which was designed obviously to help and support their hospitals during the crisis. Stage two, again, it was a much bigger stage. This is when they decided to give small businesses cash payments up to $100,000, and they also announced that welfare recipients would receive another $750. Another policy, I'll go to policy 3 first, is they allowed people to access their superannuation. So they allowed people that had lost their job to access up to $10,000 of their super. Generally, you can only access your super when you retire or you're over 65 years of age, but they're going to allow people to do so 10,000 this year and then 10,000 again next year. And the last policy, which is the biggest policy announced in stage 2, was that they were going to double the job seeker payment, so the New Start allowance. So anybody that was on New Start allowance, so was on basically unemployment benefits, plus people who had lost their job as a result of the coronavirus, were going to be entitled to not only their regular payments, but an additional $550 coronavirus payment per fortnight, which basically meant, in simple terms, that they would get nearly twice as much money. So people that were on people that were eligible for the payment were people that had lost their jobs, that were on job taker payments, and then a range of other ones which I don't expect you to memorize. But basically the idea was that people would get double as much money. So from 27th of April, eligible citizens would receive an extra $550, bringing their fortnightly income to over $1,100, up from around $580. They also got rid of asset testing, which meant that people could get access to this regardless of the assets they had, assuming their income was still under a certain level. People that were still getting paid for other reasons weren't eligible for this. And if you were getting more than $1,086 a fortnight, you would also not be eligible as well. But basically, so the coronavirus supplement wasn't available to pensioners or people on disability pensions. They'd still get the two $750 payments, but this is more for unemployed people and people that have lost their job because of the coronavirus. It also wasn't available for people that weren't citizens of Australia. So if you look at it here, basically what happened, if you're a single person with no children, your payment used to be $565 a fortnight. Now you could get up to $1,115 a fortnight. People that are with a dependent child will receive more, and people with a partner could receive up to $1,060, assuming your partner was also on New Start allowance as well. So you can see they basically put a massive boost in the amount of support people on unemployment benefits would be receiving. The government will also, as I said, be making two sets of $750 payments for people that weren't eligible for this coronavirus supplement. That's going to people that are on the pension and some people with disability support and things like that. So basically, some people will be supported, those on unemployment benefits, with extra money through this coronavirus supplement, including people who lost their jobs, while pensioners and people with disabilities would be supported with two one-off payments, which wouldn't equate to as much in total, but still providing about $1,500 in support. The argument that pensioners, they're not losing their job as a result of coronavirus because they retired in the first place, but a lot of them have suffered through losing money on the stock market and a whole range of reasons why it's important to support older members of the community. Okay, the last stage, which was just announced a couple of days ago, was what we call our hibernation strategy. So what Scott Morrison and Josh Frydenberg are advocating is that we kind of put the economy into hibernation, and then once hopefully the virus passes, people are ready and willing to start stimulating the economy straight away. So what they've done is there's one big thing they've done, and this is a really important and massive policy which will hopefully allow us to avoid recession, is they're going to give subsidies of up to $1,500 paid to employers per fortnight, which encouraging businesses to keep workers on their books. So for every part-time, casual, or full-time employer that they have, the government is going to subsidise up to $1,500 a fortnight of their wage, so that businesses don't have to sack them. Okay, so it's eligible for 6 million employees, which is about half the workforce. They've also changed the income test, which basically means that people can have a partner that earns up to $80,000 a year and still be eligible for this payment. So if you live with someone, so you're in a relationship and they earn less than $80,000, you can still claim this $1,500 per fortnight. Okay, the wage subsidy will not include non-for-profit employees will include non-for-profit employees and New Zealanders who work in Australia who can't access other welfare programs. But to be able to get this $1,500 subsidy, part-time workers and casuals have to be working for at least a year to receive the payment. So if you've been working with your employer, for at least a year, if you're part-time, casual, or all full-time, you can now get a subsidy of up to $1,500. That includes people that weren't actually earning that much in the first place. So if you were working part-time and weren't even earning $1,500 a fortnight, you can still claim that to get your employer can still get subsidies of up to $1,500 for you. The 1,500 is a flat payment and is equivalent to around 70% of the median wage, but it's also around 100% of the total wage of people who work in most of these affected sectors like retail and hospitality and tourism. So basically, the government is subsidising people's whole wage to try and just get us through this time. Employees with an annual turnover of less than $1 billion can claim access if their sales have dropped by more than 30%. So they'll be eligible for the subsidy. If you work in a business that hasn't been affected, you can't get the subsidy. And businesses with a turnover of more than $1 billion, whose sales have fallen by more than 50%, will be eligible for the scheme as well. So basically, if you're a bigger business, your sales have to have fallen by more to be able to claim this new scheme. And the last thing I'll say is, how will the government actually pay for this? Well, basically, they're going to borrow more money. So the government borrows money by selling bonds. They're going to sell bonds to either foreign citizens or local banks, which will then have to pay interest on in the future. Essentially, generally, we don't want to get into too much debt because it can affect our credit rating, and then it makes it harder to borrow. But basically, we've got bigger issues at the moment in terms of the high rates of unemployment and the health impacts. So the government's kind of put this to the side. It's unlikely that we'd lose our credit rating anyway because Australia's got a good reputation of paying back its debts, particularly the government. So they've kind of said, well, that's less of a worry. Even if we go into $500, $600 billion of debt, we're confident that we'll be able to pay it back in the long term. That's basically the impact the coronavirus has had.